Welcome to Lesson 04, Corporate Banking and Credit. In this lesson, we are going to turn a financial topic into usable professional English. The goal is not simply to memorize vocabulary. The goal is to explain a real financial situation clearly, accurately, and confidently. If you can explain working capital, credit lines, covenants, and collateral, you can follow more business meetings, understand more market news, and speak with more precision. Here is the mindset for this course. Every financial word should help you answer a business question. Who needs money? Who provides money? Where is the risk? What changed in the market? What should the client, bank, investor, or regulator do next? By the end of this lesson, you should not only recognize the vocabulary. You should be able to use it in a short professional briefing. Let's begin with the professional context. This lesson focuses on the 5 Cs of credit, credit risk, repayment capacity, and the structure of a credit memo. In a real financial workplace, people rarely ask for isolated definitions. They ask what changed, why it matters, who is affected, and what action should follow. That is why we will connect each term to a decision. When you hear the key terms in this lesson, ask yourself for questions. What is the business purpose? What is the risk? Which institution or client is involved? And what would a professional recommend next? This habit is the difference between textbook English and workplace English. In financial English, context controls meaning. The same word can sound simple in a dictionary but become very specific in a meeting, a client call, a credit memo, or a market update. For example, a word such as risk, return, liquidity, suitability, or exposure is not just vocabulary. It is a signal that a decision must be made. So when we study this lesson, we will not treat English as decoration. We will treat English as a tool for thinking, analyzing, and communicating with discipline. The core concepts for this lesson are working capital, credit lines, covenants, and collateral. We will treat these concepts as a working map. First, identify the main actor. Second, identify the financial need or pressure. Third, identify the tool or structure being used. Finally, explain the expected result. Do not rush to translate the terms into Chinese first. Try to build the English logic directly. For example, start with a simple sentence: the company needs funding. Then make it more professional: the company requires financing to support growth, manage risk, or improve liquidity. The second sentence sounds more useful because it shows purpose, mechanism, and consequence. A useful way to learn the concept is to move from noun to function. Do not stop at the noun. Ask what the concept does. Does it measure performance? Does it reduce risk? Does it provide funding? Does it protect the client? Does it help a regulator maintain confidence? Once you understand the function, your English becomes easier. You can say, this indicator measures, this bank provides, this policy limits, this product exposes, or this strategy improves. That is how professional financial English is built. Now let's focus on the English. The key language for this lesson includes the borrower is exposed to, the bank mitigates risk by, secured by, and subject to. These phrases help you move from general English to financial English. A weak sentence might say, the situation is bad, or the number went up. A stronger sentence names the driver, the direction, and the implication. For example, you can say, the company is exposed to higher funding costs, or the bank mitigates risk by tightening approval standards. Notice the structure. Professional English often uses a clear subject, a precise verb, and a reason. This makes your sentence easier to understand and harder to misunderstand. Here is a practical sentence building formula. Start with the actor, add the action, add the object, and finish with the implication. For example, the bank tightened lending standards to reduce credit risk. The investor shifted into bonds because rate expectations changed. The regulator required additional disclosure to protect market confidence. These sentences are not complicated, but they are professional because each one explains cause and effect. When you practice, read your sentence and ask, did I name the actor, action, risk, and result. Let's apply the language to a mini case. Imagine an exporter requests a revolving credit line while waiting for overseas receivables. Your first job is to describe the situation in one clean sentence. Your second job is to identify the financial concept behind it. Your third job is to explain the implication. For example, do not only say, "This is important." Say, "This matters because it affects liquidity, risk, pricing, client suitability, or market confidence." The more specific your explanation is, the more professional you sound. In finance, clarity is not decoration. Clarity is part of the work. Now turn the case into a short briefing. First, give the background in one sentence. Second, explain the relevant concept. Third, state one risk. Fourth, give a practical next step. A strong briefing might begin with, in this case, the key issue is not only growth, but whether the financial structure supports sustainable growth. Then you can add, the main risk is that the decision improves short-term performance but increases longer-term exposure. Finally, close with a recommendation or monitoring point. Your output task is to prepare a 45 to 60-second speaking answer or a 120-word professional paragraph. Use at least 3 terms from this lesson and at least 2 phrases from the language focus. Start with context, explain the key concept, describe one risk or implication, and finish with a recommendation or next step. Keep your English direct. Avoid vague words like good, bad, big, or small when a more precise financial word is available. This is how you train yourself to think in financial English. Before you finish, check your answer against FA standards. Is the subject clear? Is the verb precise? Is the financial concept correct? Is there a practical implication? If the answer passes those FA tests, it is ready to practice aloud. Read it once slowly, then read it again as if you were briefing a manager or client. The purpose of the course is not perfect grammar in isolation. The purpose is to help you speak English that can survive a real financial conversation. For extra practice, create 3 versions of the same answer. Version 1 should be simple, using plain English and short sentences. Version 2 should be professional, using the vocabulary and sentence patterns from this lesson. Version 3 should sound like a real workplace briefing, with context, analysis, risk, and action. This 3-version method is powerful because it trains flexibility. You learn how to explain the same idea to a beginner, a colleague, and a decision maker. When you can do that, you are no longer only learning financial English. You are learning how to communicate financial judgment. Keep a copy of your final answer because it can later become your subtitle practice, your speaking drill, and your model paragraph for review. Over time, these short outputs become your personal library of professional financial English.